And so we believe very, very firmly that anyone can be an entrepreneur.
If you just bought and held the top 10 stocks from today and you held them for 10 years, I guarantee you'd more than double your money in the 10 years.
Wow. Hello, welcome to another School for Startups Radio Wealth Within Market Update. My name is Jim Beach, and with me, as always, is Dale Gillham. He is at wealthwithin.us, our man down under. Dale, how are you doing today? Crazy market, up 1,000, down 1,000, it's like a yo-yo on steroids. What do you think?
Yeah, the market tends to do that when it's volatile, and you do get those swings up and down. But I mean, obviously, mostly the market's been down over the last week. We saw 2 days up and 3 days down last week. But the interesting thing for me is Friday, while it started down, it actually closed higher than it opened. And so to me, I think we're going to see a nice bounce over the next 1 to 4 weeks. In the US market, in the Dow and the S&P. And to me, how high that goes and what it does will tell me whether there's another downward movement or not to go. But right now, it's looking quite nice.
So do you think that, to use an expression we hear all of the time, that the coronavirus is baked into the price now? Is the virus price adjusted?
Oh, absolutely, absolutely. Because as human beings, we overreact, and as we said a few times, the biggest traders of stock on the exchange is institutions. It's not by mum and dad investors, so it's the big institutions. And so what they do is they overprice it in, and so they push the market down because they look at the worst case scenario. And I don't know how many times you would have seen on the television, like they're quoting worst case figures for the coronavirus and manufacturing and all sorts of different areas, and that tends to panic a lot of people. So I think it's factored in. But probably a really good example of that, Apple's only down about 3% for the whole month, and yet how much of Apple products are made in China? It's huge.
Almost all.
So if the coronavirus is hitting China the worst, and by all accounts, it's massive effect in China, and Apple's yet it's only down about 3%. Even looking at all the Fang stocks, looking at those, I mean, I think it's Facebook's down the worst at around about 9%. So it really hasn't hit those Fang stocks hard either. But again, there's a lot of other examples as well throughout the S&P 500 of stocks that have been quite good. And I did look at the top 100 only an hour or two ago, and there's so many of them looking good, and I'm quite excited about this week. As I said, I think the market will bounce.
All of the fundamentals are very strong. We had some great job numbers this last week. We had some our wages were up 3%, I believe, which is an incredible number. No inflation. Gas prices look to be headed down again. And then, of course, the Fed action. How do you add all of that up? What do you see just in the fundamentals? And then secondarily, what do you think about what the Fed is doing? Will that help at all?
Yeah, I mean, it's interesting. I mean, yeah, job numbers were up. They were expecting, I think, 175,000 new jobs. They got it was 273, but that didn't include the last week of February where the coronavirus was really taking hold. But I don't think that would have changed it too much. But be interesting to see the March figures, obviously with the coronavirus panic, I suppose. Maybe a lot of employers wouldn't be putting on extra employees. They'd be putting that off for a month or so to see the dust settle. So that's one thing we need to look at. But unemployment, it's its lowest level in 50 years. Consumer spending is remaining strong. To me, the US economy really is in a really good place at this point in time. That's why I think it's way overcooked with the coronavirus, because, at the end of the day, and I don't know whether you're a conspiracy theorist or not, but I remember we were talking about phase one of the US-China deal going through, and then within a week or two, we had the coronavirus, which meant that the trade between the US and China was basically going to be halted for quite a while. So that could be a nice conspiracy theory. Well, I need to have a bit more of a look at it. But the Fed rate cut, half a percentage point off interest rates, and obviously they do that to stimulate the economy, and but they don't do that cut rates if they think the economy is strong. So it really does. I think it's a little bit of a strange move. They also cut it about 1/4 of a basis point in Australia as well, and I was against that because they are quite low at this point in time. You know, we're talking about the US rates are now between 1 to 1.25% range, and that's so low, but I don't think it was warranted, but it will kickstart because it's going to show to businesses where you can borrow cheaper, and also individuals can borrow a little bit cheaper to buy houses and get the economy a little bit more stimulated. So I'm not too against it, but I just think it's probably a little bit of a knee-jerk reaction, a little bit too quick. I would have maybe waited another month or so just to see what happened.
Well, I feel like it was maybe the only time I can remember where the public pressure for them to cut the rate was so strong that they had to, or the market would have collapsed even more. I remember the day before, everything on the news and on the radio was, they're going to cut it. They have to cut it. They have to cut it. And I feel like the public just demanded it and pressured them. The media was complicit, of course. So do you think we're going to get another rate cut? There's already talk of another cut. I don't know how much below zero they're willing to take us.
Well, that will be depending on really some of the economic indicators we do get out of China, where we see the peak in the coronavirus outbreak at this point in time. Because obviously, like SARS and some of the other breakouts that we've actually seen, it's like 2 to 4 months. You'll generally see the peak of that, and then by that time, as humans, one thing that human beings do is we adjust. We adjust very, very well, and we adjust very, very quickly. So it doesn't matter whether it's a national disaster. What happens with as humans, we do adjust to that, and that's why they constantly say, you know, we're such resilient. And everybody knows about the coronavirus right now around the world. Everybody's, you know, taking precautions, washing their hands, wearing masks, all the different things there. China's done an excellent job in containing it there. So my thinking is the peak of the coronavirus is not too far away. And as I said, with the market, it's already factored all of that in. And, you know, at the end of the day, factories in China need to work, and a friend of mine is currently still in China. They got stuck there. They were over there for their mother was passing away with cancer, and they just got stuck there. And they emailed me last week and say everybody's going back to work around where she is. They just put masks on and they're going back to work. So that's her take. It's not as bad, if that makes sense, even though it is a bad health concern around the world, and it's a major one. I think we're going to see a peak, and then everything will slowly get back to normal again.
Well, let's hope that it does. Let's pray for that. I can't help, but I do think you're right. I think that I was expecting, Dale, for the explosion to be a little steeper. You know, here in the United States, we went to 1 to 2 to 3 to 7 deaths to 9 to 12. I was expecting it to go 1, 9, 81, 270, 1,600, you know. And the fact that it didn't do that seems to me to be indicating that we are dealing with something manageable, you know, not like one of the Matt Damon movies or something like that. So I do feel like that. Now I feel like, though, we're in a period of overreacting. A particular example was the New York governor declaring a state of emergency in the state of New York. I got to think that that's perhaps a little overreacting. And could that affect the market? Could that hurt even worse?
Oh, look, it does. When you get governments overreacting, it filters all the way down. People will do that. That's just natural human psychology. And times like these, I know I've had people commenting on some of my YouTube posts and everything else talking about coronavirus as if it's something new. It's not something new. It's just another name. Like coronavirus is SARS is coronavirus. It's the same thing. It's just a different strain of that same virus. But also they're saying to me, well, it's a different time now than what it was, you know, and, you know, I've lived through GFCs, tech wrecks, Asia crises. I've lived through SARS and Ebola and the flu epidemics and all that. That's just the last 20 years. And so there's always going to be something new come on, but how people react doesn't change. People live on fear and greed. That's what they do. And so they'll over panic. And I don't know what's happening with you guys in your supermarkets, but I know I couldn't buy toilet paper in the supermarket for love or money because everybody's taking it. Pasta, they're taking pasta, and basic food things like sugar and everything else. And yet the average family of 4 uses about 1 toilet roll per day. So a pack of 24 will last you 3 weeks. So why do you need to keep buying more toilet paper? It just is ridiculous to me. But at this point in time, I do think it's a bit of an overreaction. I think we're going to settle down to being a little bit more normal because people will get sick and tired of just hearing about it, if that makes sense. And they'll start to adapt and then they'll move on. And I think the market is looking really, really good now.
Well, I have been shopping quite a bit, largely just to get a sense of the public mood. And one of the things that's just been shocking me, I can't understand it, is that in addition to the peanut butter, the rice, the pasta, the toilet paper, the Purell, people are also hoarding water. And I'm like, this is not a hurricane, people. Our utilities still work. We don't need to hoard water. So I just can't figure that out. But Dale, I've been in the Costco's. They've been running out of things, but they say we get more tomorrow. And, it seems like that the supply chain is holding up still. So It seems like that the economic impact, we might be able to get past it as well. And the restaurants are still open. I was at the restaurant the other night. It was still full. People were still eating out, so we might not go to South by Southwest, but we're still going to grab a quick burger at Applebee's and things like that. So let's start to wrap the conversation up. Where do you see the market this coming week? And in particular, what stocks, what sectors do you think we need to keep an eye on?
Well, look, I really do think the market will move up. So there's no reason for it not to move up because when we look at how the market it runs on a specific momentum or so many points it'll rise per day. All it's done right now is just come back to that. Now, I can give you some statistics on those, maybe next week. But I think all we've done is come back to it. It's just been the speed of the fall that's really caught a lot of people. It's been a much faster fall than what we saw in the GFC. But markets always retest previous highs. They always do that. We haven't seen that yet. So that's what I was saying a little bit earlier is I think the market will bounce at this point in time. How far it bounces over the next, in both time and price. So if it's 4 weeks and it keeps moving up quite strongly, then I'm thinking, well, we've had the low and we're moving up, and the Dow will make a new all-time high, and with the S&P as well. But if the move up is a couple of weeks and it's a little bit weak, then we might need to be prepared for another fall. But I'm leaning to the Dow and the S&P being bullish. Now, call me crazy, but that's what I'm thinking. Tesla's down, so that should make you excited. It's down around 25%, so I wouldn't look at that. But I'd be looking at some of the technology sector, as I said, some of those stocks that are looking really, really good. They've hardly been hit. I'd still be looking at stocks like your Apples, your Fang Stocks. I'd be looking at your chip manufacturers like your Qualcomms, your AMDs, those ones, because they're getting affected a little bit because obviously a lot of computer parts are made in China, but as soon as they're back in the factories, they'll take off again because I need a new computer and I can't get one from HP at the moment. So I'm still putting the order in. It just might be delayed by 3-4 weeks. So I think we'll see that bounce coming through there, but I'm bullish at the moment.
And I love a good sample size of 2. I need a new computer too, Dale, so the economy must be good. If the two of us both need it, the economy is good. Sample size, big enough.
Perfect. Let's get out and buy HP shares then.
That's right. So a good week to buy some Fang stocks on discount. I would agree with that. I think it's a wonderful opportunity to do that as well. Final question. What about any impact with the Saudi Arabians flooding the market with oil and the price there? We don't know where the bottom's going. I heard they were giving $8 a barrel discounts. That's almost 15-20% or something. That's huge. What are your thoughts on what could happen with the oil market?
Yeah, I mean, obviously the Saudi Arabians don't do anything that is not planned out, and obviously they're very close with the US government. I mean, because obviously trying to guarantee supply of oil, but I think there's got to be something behind all this, because they're trying to get it out, but we are seeing a huge increase in, electric vehicles, and obviously with Europe, saying in 20 years you won't be able to buy an internal combustion engine in Europe and other countries. So maybe they're just trying to get rid of a lot more oil and make a lot more money quicker. Don't know. I don't know how long that's going to be, but enjoy the cheap fuel prices while they're there. But they may be looking at flooding the market and then turning off supply a little bit to push it back up again. I'm not sure. But as I said, enjoy the low fuel prices, because we are at the moment over here, which is great for us.
Well, as you asked earlier, it's just a good conspiracy book. Novel 1, Coronavirus, or Chapter 1, Coronavirus, Chapter 2, the Saudi Arabian oil catastrophe. And who knows what Chapter 3 is. The locust come in Chapter 3, Dale.
Yeah, we could have a
So
plague.
there's my conspiracy theory.
Fantastic.
All right. Fantastic. I appreciate the update. And as always, you have been right on the money. I did need to tell you that you predicted this week last week you predicted incredible volatility, and that is exactly what it was. So you delivered incredible advice.
No,
Dale,
thanks,
good
matey.
to see you again. As always, please go to wealthwithin.us and go check out his book on Amazon. It's Dale Gillham. Dale, thank you so much for being with us, and we will talk to you again next week.
Thanks, Jim. You take care.
And we'll be back next week. Good market trading, everyone. Invest wisely.
Please remember that this report is an educational tool. While Wealth Within holds an Australian financial services license, the information featured in this program is general in nature and therefore should not be relied upon. Before making any investment decisions, you should consult a licensed professional who can advise whether your investment decisions are appropriate for you. We hope that you enjoy this week's report.
Geez, I love chatting with Jim every single week, because not only has he got a great sense of humour, he also brings quite an interesting view on the market and what's going on, or a sage view. As a lot of people saying to me, hey Dale, you get it right most of the time. And as any expert will tell you, especially with the stock market, you can't be 100% right all of the time, and you're right most of the time. And so it really is getting down to looking at the bigger picture. And I want to share with you a couple of things today before I get onto the chart of the Dow Jones and looking at the different questions. So I want to have a look at the Dow stocks and what they've been doing, and also want to have a look at some of the S&P 500 stocks and what they're doing. So on the screen, let's go and have a look at the screen now. And what I've got on the screen is the Dow stocks. So this is all the stocks on the Dow, and it's the year. So if we're talking about the year to date, so we're talking about looking at all the stocks on the Dow from 1 January to last Friday. And you're looking at, see here, Home Depot is up 4.6% and Microsoft 2.4% still in this calendar year. Obviously, if you look at the other end, if I click here, you'll see Dow DuPont's down 36, ExxonMobil, JP Morgan Chase, all of these are down over 20%. So a lot harder hit than what the market has fallen over that same period of time. And obviously Boeing is down for obvious reasons, but it'd be interesting to see what happens through on this bottom end of the market. Are they really oversold? Now this is the Dow stock, so we're talking about big, beautiful, great stocks to own. So I'll be looking at some of these and having a look for some opportunities, because I know Jim said to me, where are the opportunities here in the marketplace? And these are some of the stocks that I'd have a look at, because you can see how far there's probably some error in my data here, so disregard that bar. But you can see how it's been falling quite heavily for some time. So seeing this stock fall down very heavily during this period of time with the coronavirus is not unusual. You're seeing stocks that were bearish, they're the ones falling the hardest, and the stocks that were bullish, they're the ones falling the least, like we saw with Microsoft, like I was talking about with Apple with Jim. So they were falling the least. And if you see down here, the ones falling least, here's Apple for the year, down 1.57%. Let's go to the month now. And so now from the 1st of March, this is what's been going on since the 1st of March. So here we have Apple, 5.73%. In this list, 11.4 United Health, Johnson & Johnson up 5, Verizon up 5%. Let's go to the week now, and we'll see what's happening for the week, or for last week. So this is last week's move. So we're seeing this, and there's some good looking stocks. Hang on, that hasn't really changed, does it? It says 5.73 for Apple for last week. And let's have a look at that, and that's obviously wrong. Something there's wrong. because Apple did gap down. Let me go to the weekly chart and let's just check to see what the... No, actually probably is right. Let me have, where's my price measuring tool? There it is. So from the close the week before, yeah, that's perfectly fine. It's up 5.7%. So Apple actually rose last week, and in a volatile environment where everybody's worried about the supply chain, as Jim and I talked about. So this is where I'm saying is always don't look at the smaller picture. People tend to look at what's happening today, whereas investors, or the best investors and the best traders, look at what the future is going to bring, and then, as we talked about, price that in. So what's going to be happening here now? People aren't going to stop wanting to buy Apple products. People aren't going to stop wanting to buy computers or other things, or televisions, a whole range of different things. So as I said to Jim, you know, I've ordered a new laptop, but I can't, or new computer, sorry, but I can't get it because there's none in stock from Hewlett Packard. Now they've got to come from China, obviously, but I'm not going to cancel my order because that's the computer that I need to do what I do. And so therefore looking at this means it'll play catch up. There might be a bit of a dip for a quarter and then start moving on. Let's have a quick look at the Fang Stocks, and here's the Fang Stocks for the year, which we talked a bit about briefly. And again, you see Facebook's down 11% for the year, Netflix is up 14%. So let's now go to the month. And this is the month. So Facebook down 6% for the month, Apple up 5.7% as you saw, but the Fang stocks haven't been hardly hit, which is why they're quite resilient at this point in time. This means the big end of town don't want to be selling those off. They're saying that there's still good reason to hold these stocks, and I think there's good reasons for you to be able to do that as well. But let's get into the S&P 500. There's the top 100 stocks for this month on the S&P 500. So you're seeing all of these stocks looking very, very, very good, aren't you? And so there's plenty of stocks going up at this point in time. And if I look at some of these, let's say Coca-Cola was up 3%, but you look here, this doesn't look too bearish to me. Let's look at Amazon. Let me go to the weekly chart on Amazon and look at this. This doesn't look bearish to me. It looks all right. So whereas if I go to, I'm going to go to Tesla in a minute because that's on one of my questions, and you'll see this looks a hell of a lot more bearish. There's Microsoft, if I show you there, and we'll go to the weekly chart on Microsoft. That still looks all right. Doesn't look super bearish to me, and that's why I'm not worried about the market. I'm not panicking on the market because a lot of big stocks are telling me that they do look all right. And if the big end of town look all right, then it stands to reason the market will then respond to that. For example, the technology sector or the technology stocks are around 25% of the S&P 500. So if technology is looking good, then that's going to hold up the S&P 500. And if it's not falling away, then people are less likely to panic. And I often say to the traders is, don't ever look at the market as a whole to determine what you're buying and selling. Look at the stock itself. So let's now go to the questions, and I'll just bring those up. And the first question we've got today is from George, who says, "Hi Dale, any view of getting into Tesla and AMD?" Obviously AMD, the chip manufacturer. Now, I did briefly mention Tesla to Jim during the thing, and obviously that has been a super bullish stock over the last couple of years. Now, just while I'm bringing up Tesla, it has fallen away, as I mentioned to Jim, about 25% over this past few weeks. So that suggests to me it's weak. Now, on your screen, you're actually seeing the chart of Tesla, and you can see here from that low back in June 2019, this stock just went vertical. And for regular viewers of this recording of Jim, or the interview with Jim and myself, you remember that I was telling him, last month, I think now's not the time to get into Tesla. I think Tesla's going to start to fall away again, just because this is a huge run up, and what rises fast and strongly will generally come do the opposite. So now let's look at the weekly chart, and we saw this week here is the week ending the 7th of February. This week here is the week ending the 21st of February. So we're seeing two big drops here, but if we put our little tool on here, click on that, and you can see Tesla is currently down around 27%. It was down over 36% at one stage. And again, a lot of people panicking. Now, right now, I'd stay out of Tesla at this point in time. Don't jump into it, because you could be catching a falling knife. Now, I'm not saying Tesla's going to fall, right back to somewhere around about $500 or even worse. I'm just saying right now is not the time to get into the stock. If you do own it, make sure you've got your stop loss on it. Make sure you're protecting your capital. But again, I'd be sitting back watching. this because it doesn't look as strong as the other stocks, but just make sure you stick to your stop loss. Let's have a look at AMD. Now, again, another chip manufacturer, so Advanced Micro Devices. This just looks bullish to me. I do like the stock. It's dropped a little bit from through here, but I've been saying for quite a while that I do like the microchips manufacturers. It was down 30%. It's now down around 18%, so it's looking better. This could be a nice little retest, but again, it hasn't proven to me that it has stopped falling. But I would also look at Nvidia. As you saw a little bit earlier, Nvidia has done very, very well over this move. It is currently up, as we saw for this month. And also the other one is Qualcomm I'd have a look at as well, so a couple of those. Now let's get on to the next question, and the question is from, I can't say your name, matey. I think it's Macca Stuff. So please excuse me if I didn't say your YouTube name properly. He says, hi Dale, can you clarify the correct mindset? He says, basically, we are told to stick with your rules and don't panic sell, and that's really what I've been saying a lot of. So they say I am left confused as to what mindset to have. If I stick with my 10 to 15% stop loss and they trigger, does that mean I should have expanded my stop loss in crazy weeks like this? They're absolutely, positively not. You have stop losses worked out for a reason. And this is what I teach traders a lot of times, is you set your stop losses based on the stock. Some stocks are more volatile, some stocks are less volatile. And whilst they'll work most of the time, they won't work all of the time. And this is where you need to look at the thinking is, if I say 10%, it's going to work maybe 7 or 8, 9 times out of 10, but 1 time out of 10 or 2 times out of 10, it's not going to work as well as what you would think. So you just need to suck it up, because that is the market, that's trading. So if you're going to trade, you've got to expect that stocks that you have will fall away and they will trigger your stop losses, and it just needs to be next, get out next, and sticking to your stop losses. That's really what it's about. He goes on to say, if my 10 to 15% stop loss trigger, I then hear panic selling in my ear. So do I change my strategy or let stop losses trigger, tighten them, loosen them, or cancel them? Do general rules regarding stop losses change when panic selling happens? 10% stop loss is a bugger when the general loss in the times like these are 10%. Thanks in advance. And again, it's just trading. You have stop losses to protect capital. You let the dust settle and then you come back in again. And yeah, you're going to have times like this more than once over your period of decades trading the market and or investing in the market. If you're in the stock market and you're trading and you don't expect that at times you will lose, then I call that delusional trading. You need to understand that the market will rise, it will fall, you will trigger stop losses. Again, take your stop losses, rip the band-aid off fast, move on, get to the next stock, wait for the dust to settle, and then start trading again and looking at great stocks. But a great question. Thank you very much for sending it. I think we're getting a lot more questions in this bearish market than the bullish market, and to me, people need to spend time in the bullish market learning all of this stuff, so that they know what to do when the market is bearish. There's, at the end of the day, when the certain thing hits the fan, you'll learn how good you are and how well you know your rules and you know your strategies. But thanks for sending your questions in, and thanks for watching until the end of this video. I do appreciate that. Now, if you have any questions that you'd like me to answer, just stick them below in a little chat thing there and I'll answer them. So get your fingers on the keyboard and get typing. You also need to remember that I do these reports every week, so hit the subscribe button now. Click the bell on the right of it so you know when we go live with our next stock market reports. Now remember, this is the US stock market report, so please only US stocks on this stock market report, or comments around the US market. That would be appreciated. For now, I'm Dale Gillham. Goodbye, good luck, and good trading.